recessions are just like anything else. This too shall pass. If we have a recession, it's not the end of the world. I fear that we're almost in this mode now that we've been looking for a recession for, I don't know, 2 or 3 years. Everybody's been on edge about recession. But when you're on edge about it, fear goes up. And so when all of a sudden somebody says, okay, we're in a recession, Little Rock is our next location for our question. This comes from Dontel in Little Rock. After watching the debate and some subsequential coverage, I'm worried about a recession after the election. What can I do to prepare myself for the outcome of the election, and how should I adjust my investments? Dontel, thank you for that question. Teresa, when you think about investments, everybody wants to equate that to the here and now of politics. But history tells us that that's really not a solid connection.
Yes, and we know historical performance is not indicative of future performance, but if we look at the patterns that we've seen in the past, the market actually doesn't care about the election other than that it's over. While it's going, there's a lot of volatility, and I think some of that probably is driven by investors panicking.
Yes.
But once it's over with, it seems to not really matter who won.
You know, we had the assassination attempt on former President Trump. Can you imagine if that had happened not on the weekend, but during the week? Can you imagine what the market would have reacted, how they would have reacted to that immediate, question of, oh, is he okay, or whatever the case may be? The market would have probably been very volatile because that was a volatile situation.
Yes.
Not making any political aspersions about it one way or the other, but that's how markets react.
Yes. Well, and I think people don't realize that the market is affected by investor behavior.
Sure.
And so when something happens, and especially if it had ended differently, that could have created some short-term volatility. But the key is short-term.
We like pictures around here, so let's go to another graphic about this issue. If you take a look at the graphic, it's really just solidifying exactly what Teresa says. If you look at all the election years that have happened, as far as what happened post an election, then you see that the S&P 500 historically from 1952 through 2022, it's had a pretty even return. Now, it's different based on who wins the election, but I think you're right, Teresa. What the markets mostly want is, number one, for it to be over, and then secondly, markets, interestingly enough, like gridlock. They like this checks and balances that the founding fathers set up, and I think that's one of the things that kind of keeps things from going off the rails too far. That oftentimes when you have a incumbent in the White House of one party, you have the Congress controlled by another party, or at least enough of Congress to block, just this
someone
wholesale
from just steamrolling.
Steamroll their ideas and what have you. So clearly, I think that's an issue. I think also, Dontel, recessions are just like anything else. This too shall pass. If we have a recession, it's not the end of the world. I fear that we're almost in this mode now that we've been looking for a recession for, 2 or 3 years. Everybody's been on edge about recession. But when you're on edge about it, fear goes up. And so when all of a sudden somebody says, okay, we're in a recession,
we're already in it by the time they call it.
Yes, and panic ensues and all of that type of thing. And that's just not productive because you have to have a long-term vision.
And if you look at the progression of recessions over history, they've become shorter and shorter with each cycle. If you look back to 2008 even, it was about 18 months. It wasn't pretty, but it was over very quickly. So there's no need to just panic. Now, what I would ask you, though, Dontel, is have you got a plan or just a bunch of investments? If you just have a bunch of investments, it may be time to get with your advisor and verify that you're on track with your plan. But you certainly don't want to react and sell if the market dips, regardless of the cause.
I mentioned a little bit earlier that, pundits have been looking for a recession for a good year to 2 years. They've been calling, most of them have been calling for a recession. Oh, it's just going to happen. It's just a matter of time.
Yes.
Well, let's take a look. In the last year, the S&P 500 is up about 28%. The Russell 1000 is up almost 40%. So you can't call these things. No one out there has a crystal ball. I got one guy that has been right this time. He thinks he's got a crystal ball, but I got news for him. He doesn't have a crystal ball. Just because he's been right this time doesn't mean that he will be right from this point forward. I think what you've got to do is you've got to think about the next 20 to 30 years. If Dontel is nearing retirement, which I would assume based on his question that he is, he's got to be thinking about over the next 20 or 30 years, how do I be sure that a few things happen? And we alluded to this in the previous question. One is, how do I be sure that I'm going to have regular, predictable, dependable income coming to me for the rest of my life? That is an essential question. Sometimes we major on the minor things. Well, dependable income is a major thing. That ought to be first and foremost in Dontel's mind. Secondly, I think Dontel needs to be concerned about how do I get some increases in my income over time? Because whether a recession happens or not, one thing that we do know is that prices are going to increase. Even if we don't have a high inflationary environment, prices have steadily increased throughout history.
Yes.
And we will continue to see that. And that's a big vulnerability in retirement.
Yes. And I also think we don't want to ignore those that feel like maybe they haven't gotten prepared, because sometimes that question comes from a place where you feel like I can't afford to lose any money. But if you're several years out from retirement and you've got some time, this is a time, if you think a recession is coming and one happens, there's an opportunity in that for you to really throw some investments together and get some extra growth out of those. If the market's down and you can increase your contributions, that's going to pay later on when the market does recover, if you've got the opportunity to do that.
I always love taking the opportunity to talk about my first recession. My first scare in the market was I just started investing. I was not even a financial advisor at this point. It's back in 1987. I just opened up a mutual fund and I was putting money into that mutual fund. And then along came Black Monday, and the market fell the most that the market had fell ever. I want to say it was 25 or 26%, something like that, in a single day.
Ooh, that would be painful to watch.
Scared the bejeebies out of me. I'm like, because the money
you
I
just got started and all your money's gone.
Well, and yes,
Yeah.
and I'd put this money into this thing, and I wasn't wealthy by any stretch of the imagination back then, and so it was all I had. And so I called my advisor and I said, what do I do? He goes, hey, wait, let me ask you a question. Was that mutual fund a good buy when you got it? And I went, I guess so. And he said, well, it's an even better buy now. Buy some more. And, it changed my whole thinking about that. Now, Dontel might not be, young and trying to accumulate money, but recessions are, my point here is that nobody even thinks about Black Monday in 1987. That it's
I
just
have to
not
tell you,
even.
if I didn't work in this industry, I wouldn't even know what you were
wouldn't even know what I was
referencing.
talking about, right? So, things that we tend to focus on tend to be non-issues. They are headline grabbing, they're attention grabbing, they're shiny objects, if you will, but they are not necessarily impactful to the outcome of your retirement. And I'm just a bottom line guy. I want to know what the outcome needs to be and what's going to affect that outcome. There's a lot of things that affect the outcome more so than a temporary
Arbitrary.
recession coming down the pike.
And we don't want to negate how they feel. We understand that it's very frustrating to see your balance dip. I'm there. I got started later because I joined this industry later. I wasn't educated about this. And so I understand when I see my balance dip that there's a moment of like, oh. But then I have to remember my why. I have to remember my plan. And that's why I'm so passionate about people having a plan, because if you have one, you can go back to that and go, okay, we knew this was going to happen. We planned for this. It's okay.
Right. Absolutely. Okay. If you are thinking about retirement, there is an important document that you absolutely have to have. It is called the 7 Steps to Financial Independence. And you can download that if you just text the word STEPS, STEPS, to 501-381-5228, or you can go to our website, getreadyforthefuture.com and /steps, getreadyforthefuture.com /steps, to download that document right now. And it's a great guide. It's not the end all be all, but it gives you the focus that you need to go down this journey. I think that's where a lot of people really err. There's so much noise out there. There's so much information there's no context for it. This is a context piece.
And I think it's overwhelming. When you feel like you don't have it all together already, and then you go looking for advice online, you're going to find 6,000 websites that probably disagree with each other. Whereas this document, I love the way that we've put this together because it is action items. It's things that you can do. And it also kind of gives you an idea of whether you need to be in to see an advisor or if you need to take care of some other things first.